Afternoon, everybody. Uneducated Economist here. So everybody keeps asking what's going to happen with the Federal Reserve and the interest rate cuts come September. Are they going to cut? What's that going to do to the housing market? Everybody has these questions and has all these fear and uncertainty and doubt that runs through their minds as they're trying to figure out how to position themselves accordingly. So let's talk about what it is that's actually taking place here, so that we can have a better understanding of what it is that we need to do with our own business, with our decision making when it comes to finances, when it comes to buying that house, when it comes to saving or investing. All these people need to know exactly how it is that they need to position themselves in accordance to the Federal Reserve monetary policy decisions. And when you look at the Fed cutting rates, most people are so focused in on this because they want to be able to know like the right way to position themselves for like buying a house. Like, for example, that's probably like the biggest one. If I am understanding this correctly, this is kind of like the narrative of the people. If they understand this correctly, if the Fed cuts rates, they will have the opportunity to buy into a cheaper house, or at least have the opportunity to take out a mortgage that is going to be a cheaper rate for them to then afford to be able to buy the house. Like, this is kind of the common narrative out there, but nothing really could be further from the truth. Like, literally nothing could be further from the truth. The Federal Reserve lowering interest rates is not going to make housing more affordable. If that was the case, we would have had examples of that from the past. Is there a short moment of opportunity, like a very small window of opportunity for somebody to be able to take advantage of a lesser interest rate so that that mortgage rate may be cheaper for them to buy the house? Yes, there is that small little opportunity within there, but most people are not going to be able to take advantage of that. Like, most people are going to have to deal with the fact that lowering interest rates will increase the demand. When you increase the demand, the supply issues begin to take place and the prices start to move up. This is the unfortunate circumstances of trying to lower interest rates to spark aggregate demand or to spark that consumption, is that it creates the supply-demand imbalances. So when we think about lowering interest rates and people say, hey man, is this going to give me the opportunity to buy a house cheaper? Maybe, if you're well positioned right now to jump at that opportunity, right? Like right now, ready to go, so that as soon as you see the opportunity, you jump at it. Because most people are not going to be able to do that. They're going to see the opportunity and then go and try and position themselves to take advantage of it, only to miss out by having somebody who is positioned in order to take advantage of that situation. So really, when people look at the Federal Reserve to think, okay, when they lower rates, I'm going to be in position to take advantage of the better mortgages that are out there so that I can go and buy that house. And so they sit there and they wait. What's going to happen in September? What's going to happen at the Jackson Hole meeting? What's going to take place with the Fed FOMC and the new members of the FOMC? Are they going to change course and fall into politics and all this other stuff? And they get this fear, uncertainty, and doubt, and then fail to understand that the mortgage rates are already coming down. Like, they're looking for better mortgage rates, and they are occurring as we speak, waiting for the Federal Reserve to move. So now we have to ask ourselves, really, is it the Federal Reserve that we are looking for to provide better mortgage rates? Or is it the expectations of the markets that then put out there the idea of what it is that's happening so that the mortgage rates actually start to fall? You see the difference inside of it? Like, people are waiting for mortgage rates to come down, but mortgage rates are coming down right now. Why? Because the credible threat of the idea of lowering Fed funds rate into the future. See, the idea of cutting rates actually has somewhat of the same concepts, same power, same results, right, as cutting. The expectations of it has almost the same power as actually doing it, if people are convinced of it, if they are absolutely positive. And how many people right there in the mainstream media, when you look at out there in the Google searches of what's going to happen with the Fed funds rate, how much is like pushed out there that they are definitely going to cut? Bowman out there, major dissenter, right? Waller dissenting from the Fed. They want to cut. All the problems the Fed faced with the labor's issues and and like, you know, the jobs market being bad and all the tariffs and all that other stuff, it pushes fear, uncertainty, and doubt out there. People are like, man, I got to wait and see. I got to see what's going to happen. We got to be data dependent. And meanwhile, there's actual action taking place. See, I think about it when the Federal Reserve goes to move, then people start to say, hey man, they took it, they're doing this for labor reasons, like the labor market or something is weakening, the jobs market is weakening. This is the reason why they're doing it. And I think to myself, you know, it takes 6 months to a year before that Fed funds rate actually has an impact on the economy. 6 months to a year. People say, oh man, look at what's going on here with this data. The Fed needs to act now. And I'm thinking, even if they acted now, it would take 6 months to a year before it really truly impacts the economy. There's a lag. It's literally, they describe it as the Fed's lag period from the time they adjust to the time that it actually impacts the economy. 6 months to a year. So what's easing financial conditions right now if we have mortgage rates coming down? It's not the Fed doing it. It's the market's perception. And now, how adamant are they with the mainstream media narrative? It's pretty persistent. The more they deploy this information, the more they convince you of what it is that's happening within the future, the more that actually starts to occur within the economy. They really don't have to do anything. People sitting around waiting for the Federal Reserve to move. Right? They're sitting around waiting for the Fed to move, but yet right now there's movement taking place. And they failed to see it. They failed to see this as the monetary policy. They think the monetary policy is being discussed right now. The monetary policy has already been deployed. Right? The monetary policy has already been deployed. Think about it. It is easing financial conditions as we speak. And people are waiting for when the Federal Reserve is going to be easing financial conditions. See, this is just the obvious one. The unobvious one is the rising of the neutral interest rate, which is something that we discuss so much on this channel, and very few economists out there ever bring it up. Having no idea or no belief or no true understanding of what it is that the neutral interest rate means for the monetary policy for the Federal Reserve. It's a profound thing. And yet, very rarely will you ever see it stated, commented, or discussed anywhere on the mainstream media. Very rarely. The neutral interest rate is the rate when the Federal Reserve is neither accommodating nor restricting the economy. It's when the Fed is neutral. Right? Well, the Federal Reserve, supposedly with elevated interest rates, is being restrictive. This is what Trump says. This is what all these economists say. All these people out there say that the Federal Reserve is being too restrictive with the elevated interest rates, that they need to lower those interest rates so that the economy can be more accommodating. Or they would be more accommodating within the economy, the financial markets would be. Meanwhile, the inflation expectation has raised the neutral interest rate. That neutral interest rate is moving ever closer to the Fed funds rate, making the economy less restricted. See, this is the situation we are now facing. Most people don't see it, but the top 20% seem to. Their consumption is increasing. Their purchases of luxurious homes are increasing. Their net wealth is increasing. Everybody else, 80% of the people, are sitting around waiting and wondering for what the Federal Reserve is going to do so that they can position themselves. Meanwhile, the rich are already doing it. Right? They're positioning themselves, getting ready for you. Think about that. You haven't done anything. They're doing something. What are they doing? They're getting in position and getting ready for you. And what are you going to do? You're going to take out a whole lot of debt, and you're going to borrow that money into existence, and you're going to deploy that money into the economy, and where do you think it's going to go? They're begging the Federal Reserve to lower interest rates. What does that mean? Lowering interest rates means more financial instruments being produced. That means more loans, more mortgages, more credit card debt, more of all that financial stuff out there that people are begging and waiting for, which literally drives 80% of the people to the bottom side of the wedge, while at the same time puts the 20% of the people on the upper side of the wedge, and the wedge drives deeper. This is the unfortunate circumstances we now live in. I mean, understanding it for yourself is the key to this. There's nothing that anybody is going to do that's going to save it. Nothing that anybody is going to do to make the conditions easier. There's nothing that anybody can do out there that's going to reduce the inequality that is now happening within our nation, within our economy, because there's never been an example of it taking place that was anything other than a short-lived concept of stimulus or taxes. The end result is ever increasing amounts of separation. And that's the unfortunate circumstances we live in. Understanding it, you don't position yourself to wait for the Fed to move, right? You don't position like you take position immediately. As soon as you see it happening, as soon as you can take advantage of the situation before the mainstream media tells you that it's okay to do it. See, most people are sitting around waiting for the idea of a better interest rate environment that's going to somehow save the economy. It's the most delusional thing I've ever heard. There's no example of it ever happening. But all the big-time economists, all the rich people out there, they keep toting how awesome of an experience it's going to be if we lower these interest rates. And I think to myself, yeah, more debt issuance, of course. Driving the wedge even deeper. Of course you would like that, wouldn't you? You know, those rich elitist people don't come up with concepts to make them poorer. Right? I mean, does that sound right? That all these people who put together the programs, who put together all the investments, who put together all this stuff, and then come out and deploy the information, do they do things that makes them poorer, or do they do things that's going to make them richer? I mean, just think about it. I mean, they're the ones who are providing the information. What do you think is going to happen with that information once they have pushed it out there in order for them to be positioned in the right way? What do you think is going to happen with that information? It's going to make it to you, you're going to receive it, and it's going to benefit them because they're the ones deploying the information. Just think about it like that. You know, how many times have I come out here sharing with you documents, speeches, information that is never shared anywhere on the mainstream media ever? How many times have I shown you where the Federal Reserve has talked about not going for a 2% target with inflation, but going moderately above 2% for some time? But yet, very rarely will you ever see that out there on the mainstream media. You know why? It's because they don't want you to know about the monetary policy in the appropriate fashion, because then you would not be doing things that would put you in a position that makes them rich. They wouldn't be able to control you at that point. Having you confused, leaving you in fear, uncertainty, and doubt is absolutely the name of this game. And it's obvious every time I open up the Google search or read one of these mainstream media articles or something that seems to be like legit information or valid information or credible information, and all of it I see out there is literally misguiding the people. And I've come to the conclusion that it's on purpose. They do it on purpose because if you were rich, would you do things that would make you less rich? Or would you do things that is going to make you richer? Right? So think about that for just a minute. The people who are deploying the information are the rich. They are not going to deploy information that's going to make them less rich. That's what it comes down to. Most people miss that. They look and they say, well, I can read between the lines. No, they don't even give you anything to read between. Everything that they give you is misguided, misinformed, propagandized information to give them more power. You know, the political movement is just ripe with this stuff. You know, it's riddled with it. All right, let's read through some of these comments here. We're 15 minutes into it. Sell everything. People assume lying is illegal. Well, they shouldn't. I mean, FASB 56, the federal, what is it? The Federal Accounting Statistics Board, whatever it stands for. FASAB. FASB 56. If you go on and look that up, I mean, it's basically legalized. The government can, for national security reasons, deploy any numbers they want about anything out there. So ultimately, you're looking at inflation numbers, you're looking at jobs numbers, you're looking at all these numbers out there, and ultimately every single one of them could be a lie. The government has already stated that they, for national security reasons, deploy whatever numbers they want. They say that they're good enough to do your investments by, but who knows? Since they already said that they're going to lie, it must mean that everything is a lie, all right? Or at least that's the way I have to look at it. All right. If you need money next 5 to 20 years, real estate is king. Calling 11 on the dice. Thank you all night for being here. Like I said, my mom is getting $25,000 a year from CDs. A landlord of a single home might give you $8,000 a year. Plus you have to worry about liabilities, tenants, fights, burning down the house, etc. Do you think human nature will let us go to space too much greed? Will let us go to space? Well, going to space is a luxurious experience, and I think the rich people are eventually going to want to enjoy the experience of going to space and back, right? Like, so space travel I find going to be probably something that will take place at some point in the future, just from the idea of going to experience something that nobody else could ever do, you know. And so yes, but landlords can sell property for value as well. Yeah. And you know, this is really what it comes down to, is that when people ask me all the time, man, how is it that I make it? What is it that I need to do? What is it that I can do to be rich or whatever? I've met a lot of wealthy people, like a lot of wealthy people, not only just through online, but just my own personal experiences of just traveling around. Almost all of them, like all of them did it with real estate. All of them. Right? And so it's like trying to reinvent the wheel and not do it with real estate. I mean, it can happen. There's plenty of people out there who do it. There's no reason why you can't. I just don't know anybody who didn't do it with real estate. Like personal. Like they all did it with real estate. Just saying, you know? All right. Every time in history when a new place is found, it's prisoners and the trash that gets sent there first. Huh. Can you start with stocks and then go into real estate? Absolutely. You don't have to take any, there's no rhyme or reason or rule to any of this. 1, keep your expenses low. 2, get into cash flow as much as you can. How do you do that? Right? Some people are focused in on getting rental properties. Some people are focused in on dividend paying stocks. Some people are focused in on doing business. Right? There is no wrong way to do this. It's all up to you. What motivates you? What is your skill set? What is it that you have in mind for what it is that you want to do? Do you want to be a property owner? Do you want to work on houses? Do you want to do that sort of thing? Like I worked on houses for a very long time. It's not that appealing to me. Like some people just enjoy the hell about working on house and doing carpentry and doing all that other stuff. I mean, it's okay. Like, it's okay. You know, like for other people, it's like a fun thing to do and it's exciting. I wouldn't put it in the realms of fun, right? Like that to me isn't necessarily fun. So I personally don't have that kind of motivation that a lot of other people would. You know, they're like, dude, your skill set, your understanding, you would kick ass at this. And I'm like, God, it sounds terrible. You know, other people told me, it was just like, dude, with your understanding of economics, you should go and get a degree. And I was like, what would I do with an economics degree other than go work for some corporation out there doing economics and analyst and whatever, like studying? Like, that doesn't sound fun. Like, I don't want to do that, you know. Like, that doesn't sound like a fun economics job. I like doing this. This is fun for me. So going and getting a degree in economics so that I could do something in economics that I don't enjoy doesn't sound like the direction I want to go. Other people would love it. They would love to be an economist for some corporation. That would just tickle them pink, right? And I personally find that to be kind of repulsive. I was like, no, thank you. I'm not interested. So it's all up to you. Just figure out how to keep your expenses low and get in as much cash flow as possible. Business, dividend paying stocks, you know, just even speculation into certain assets, if you time it right, you know, everything is a possibility. All right, sitting in a car down by the river is cool. Okay. I don't have the mindset to deal with tenants and being a landlord. Oh, we already read that one. And I'm not quite down by the river, and I'm just not sitting here. This is my lunch break, right? Putting your money wherever Trump says. Absolutely not. In fact, I try to find things that to like do the opposite. I have zero trust for that guy. Like none. Like I have no faith or belief that there is anything positive or good that's going to come from it. But then again, I also don't really think that there's anything negative coming from it either. You know, that's kind of weird to say, right? I don't see the positive and I don't see the negative. The only thing I see is my understanding of the situation in order for me to make a positive or negative choice based on that. That's what it comes down to. Because the external is all a neutral. Everything is a neutral. The only hidden meaning behind it is the meaning that you give it. There is no hidden meaning, right? People say, well, this means this and this means that. And I was just like, no, that's your interpretation of it. That's how you've given meaning to it. That's what you believe. Other people don't have to do that, you know, and they may not. All right. I'm here. Right on, man. Great to see you. Standard Nursery. Oh, yeah. You actually had a really good comment earlier. Thank you. Um, so do you think higher for longer is still the plan? Absolutely. I mean, I said it a long time ago. The Fed is getting high and staying high, right? Once you're high, you never want to come down. Jerome Powell loves being high. Like, I don't know how many videos that I have done that have said this over and over and over again. And I haven't changed my tune. I still believe exactly the same way that I believed over 2 years ago when I said that the Federal Reserve was going to stand still and tried to push the neutral interest rate higher through elevated inflation expectations. That's what's occurring, right? Now, whether people want to believe it or not, or, you know, that's entirely up to them. Like, I mean, it isn't up to me to make other people believe what it is that's happening out there. This is what I recognize. I mean, I said it a long time ago. The Fed was going to stay elevated, push inflation expectation, and raise the neutral interest rate. That's what's occurring, right? Now, I couldn't tell you, like, I couldn't describe the details of how they were going to do this. I just knew that it was going to happen. I just knew that they were going to keep the supply chain broken, because that keeps the elevated inflation expectations. You can keep the supply chain broken with the credible threat of tariffs, right? And with this, you will raise the inflation expectation. It doesn't need to necessarily raise the inflation itself, right? Like, that's not the part I'm talking about. I'm talking about the expectations that the people have. That elevated inflation expectation, just your belief, your fear, uncertainty, and doubt, is enough to demand a higher return on your capital investments, and you will expect to pay a higher interest rate. That will raise the neutral interest rate over time. That is what is occurring. To see it any other way is to try and deviate from the understanding of what is actually occurring. Right? So that's how I see it. If the Federal Reserve was to actually lower rates, the next question we should ask is, where's neutral? Are they going to lower into neutral? They said that they want to be neutral. What if they lower to neutral and the inflation expectation continues to be pushed? Will that raise the neutral interest rate above the Fed funds rate and actually make the Fed accommodating? I mean, these are questions. These are legit questions, right? But you will not find an answer to that anywhere on the mainstream media. You have to recognize it for yourself. You have to internalize this for yourself. And then look out there and say, okay, is the inflation expectation being pushed? Absolutely it is. Is the actual inflation coming in elevated? It's moderately above 2%. Wow, where did you read that before? Right inside of the Federal Reserve's monetary policy strategies. Like, they said that they were going to do that. People say, man, the Fed's confused, don't know what they're doing, don't know what the next step is going to be. And I'm like, are you kidding me? They are exactly where they want to be. Like, there is very little doubt in my mind that they had pulled, like, they're in the back office giving each other high fives. Trump's in there with them too, saying, boys, we did it, man. We raise that inflation expectation, raise that neutral interest rate. The economy is be far less restricted than anybody had ever given it any kind of consideration for, and the rich people continue to get rich, and the poor are wondering what they need to do. They're sitting around waiting for Powell to move. Right? Not having any clue, never really understanding the Fed's monetary policy, knowing that Powell is nothing more than a spokesperson. He doesn't make decisions for the Fed. There's 11 other voting members who put together monetary policy. They vote in what they feel is the most appropriate way to continue the Fed's strategy. Not their own personal strategy, the Fed's monetary strategy, the long-term goals and monetary policy strategies, the consensus statement, right? That's what those members are trying to do, is to achieve that goal, not their own personal goal. They may have their own beliefs, their own politics, their own all that other stuff, but they are within their own belief systems, even if they disagree, are attempting to get to the consensus statement, which is a monetary policy of long-run expectations, inflation, and goal setting, right? And if you go and read the consensus statement, they want a long-term inflation expectation well anchored at 2%. That's why they constantly repeat the 2% target over and over and over again, because they want your long-term inflation expectations well anchored at 2%. But that is not the same as the current inflation expectation, which they do manipulate in order to solve the problem that they were facing of too low an inflation. They switched to flexible average inflation targeting, which means that monetary policy will seek to achieve inflation that is moderately above 2% for some time to make up for the fact that they failed to achieve the 2% target over the previous 10 years. I mean, this is from their own words. Everything that I say, I can back up with their own words coming from the Federal Reserve. Man. Knowing what you know about the Fed's goals, do you think investing in crypto is a good decision? Well, I don't know about investing into cryptos, but speculating into cryptos isn't a bad idea, especially Bitcoin. If you dollar cost average over the course of 4 years, Lynn Alden told me that there is nothing in their economic models that would show that you would be down, even if you started at the top of the market. Buying Bitcoin, dollar cost averaging for 4 years, I did that strategy. The moment that she told me, I did that very thing. I used Cash App to purchase dollar cost average into Bitcoin for the course of 4 years, and it absolutely killed it. Did very well. Speculating into cryptocurrencies, especially the right one, like I'm not really into all the rest of the altcoins, but I'm definitely into Bitcoin. I don't think is a bad idea, but I call it a speculation because that's exactly what it is. Now, if you want to invest into the crypto market, you're going to have to find like one of the exchanges to invest in, and I did that with Coinbase, and I bought Coinbase dollar cost averaging over the course of a couple of years. As that stock IPO came out, I bought it when it was high. I bought it all the way to the bottom. I bought along the bottom, and I've been buying on the way back up, and I absolutely killed it in Coinbase as well. I mean, I believe that stock was up 250% at one point. I don't think it's that today because it's kind of pretty big drop, but you know, it was significant. It did quite well. So into the cryptocurrencies itself, sure, not a bad idea. Investing into crypto processing like exchanges or some sort of business in that fashion, if you pick the right one, that's a good way to go about it as well. I don't have a problem with it. I actually do it myself, but I don't necessarily think about the Fed's monetary policy as the reasoning to do it. Like, just the fact that the central bank exists means that there's going to be ever increasing amounts of inequality and separation between the rich and the poor. There is no doubt in my mind. There is nothing, literally nothing that can be done outside of shutting down the central bank itself that will do anything other than create the inequality. Like literally nothing can happen any other direction. You can have, I don't care what the politicians, I don't care who they tax, and I don't care who they try to do direct money injections to. There is nothing that they can do to prevent the separation if you're going to do ever increasing amounts of money, new money, no matter how you do it. Tax the rich, inject it to the poor, you will find separation. It will continue. Um, because there's like literally no example. All these people who have this MMT theory or whatever, it's just like they're delusional. They don't have any idea about the underlying economic forces. They pretend that they don't exist or simply just don't know that they exist, and therefore it isn't a concept within their mind. So they have this expectation that, oh yeah, you can tax the rich and you can just give it to the poor and that will somehow balance it all out, but yet never realizing that it was the human itself that is making piss poor decisions with that money, that is literally either putting them on the bottom side of the wedge or they're making awesome decisions with that money and it's putting them on the top side of the wedge. There's nothing that politicians can do to make a human make the right decision, right? Most people who get that new money coming in is like, here's a stimulus check. What are you going to do with it? Woohoo! Party time! Right? That's what they do with it. There's a handful of people who are like, I'll pay off some debt and then invest the rest. Right? No, that's what rich people would do. Right? Poor people don't do that. That's why they're poor. Right? Or else they wouldn't have been poor to begin with. So, all right, they can make them do the wrong decision. Oh yeah, they can definitely give it for the wrong decision. Lynn really is awesome. She found what she's really good at. Lynn is really awesome. Lynn is a genius about behavior, attitude, compounding interest. I totally agree. I mean, I would put Lynn up there in the top 5 of all my favorite economists and those who have an understanding of things. I mean, I would put her in the top 5. Brent Johnson, Jeff Snyder. I'm definitely in that group. Stop attacking me. Ooh. All right, I saved all my stimulus checks. I bought gold with my stimulus. I paid off debt and bought Bitcoin and different things like that with that. All right, I did well trading options in Robinhood. Aldi hire and fire, better off panning for gold. What do those economists not talk about? Why do those economists not talk about the credible threat theory? Well, first of all, they probably never ever heard of the credible threat theory since I invented it, or we invented it here on this channel, right? So unless they happen to watch The Uneducated Economist, or somebody happened to, just been able to inform them about the credible threat theory, literally the credible threat theory is only understood by a handful of people, those who follow this channel. Nobody else understands it. Now, I have talked with guys like Joseph Wang, and I said, hey man, this is my idea about the neutral interest rate and the inflation expectation and pulling that neutral interest rate higher and moving to the Fed funds rate. And when I mentioned that to him, he looked at me like, yeah, I know. I just never really thought about it like that. Like, that was literally the expression that I got from him. Like, he understood every single word I said. He knew it internally. Like, he had already internalized it, but didn't line it up the way that I had just done. Like, I just simply just stated it. The inflation expectations pulling the neutral interest rate higher, making the economy less restricted, or at least the financial markets less restricted. And nobody really talks about it like that, right? And when I brought that up, he literally looked at me and says, yeah, that's that, yeah. And you could tell, the wheels were churning. Like, he's one of the smartest people I know, right? Like, when it comes to understanding the Fed, same with Lynn, right? And so a lot of times we get so overwhelmed with the way that we are viewing things that sometimes even just something as simple as just what I've said about the neutral interest rate ends up bypassing them. Like, they miss it, or they're looking at too much other stuff, or they're just too close to the project. So all of a sudden when I come out and I say something like that, it all of a sudden dawns on them. I was like, wow, that is. Now, me being from the credible threat theory portion of things, saying, wow, they're using their words more than their actions, the reasoning behind it is how I started following the neutral interest rate, right? Because they were using their words instead of their actions because of the lower bound of 0 and the fact that the neutral interest rate was very close to 0. Now, this was the problem that they were facing back during the great financial crisis, I mean, we're talking going on almost 20 years ago. This was the situation that was taking place. And so as you start reading through the Fed documents, you start reading through the Fed speeches on what it is that they are planning on doing to conduct monetary policy when the Fed funds rate hit zero interest rate policy, and the neutral interest rate being close to zero meant that they weren't going to stimulate the economy. You can't get far enough below neutral to actually stimulate the economy. This was the problem that the Fed was facing at the great financial crisis. Very few people were really aware of this. Yeah. And so they went into this forward guidance promise to keep extra low, extra long for an extended period of time. And this started pushing the inflation expectations, which started increasing the asset prices. We saw the stock market go up, housing market go up, bond market go up. All these things started to go up because people were essentially speculating on the idea of the inflationary scenario. But the real inflation, the one that the Federal Reserve was looking for, was very muted. It didn't necessarily occur in the fashion that they were waiting for or hoping for. This is 2018. The Federal Reserve was like, crap, what are we going to do? Monetary policy strategies for a low neutral interest rate world. John Williams said it right up in there. This low neutral interest rate is interfering with our monetary policy. One of the ways we can fix this is with average inflation, where we let inflation run extra hot, extra long for an extended period of time to make up for the deviation from the shortfall from the 2% target. This is John Williams saying this in 2018 before there was ever any inflation to begin with. Like, they're saying, hey, we're going to let inflation run extra hot, extra long for an extended period of time. And I'm like, wait, back up there. Back up the turnip truck there, Mr. John Williams. Let me ask you something, bro. You just went and expanded the Fed's balance sheet from $850 billion to over $4.5 trillion and failed to produce an inflationary scenario that you were looking for. All of a sudden, you're just going to magically come up with an inflationary scenario that is going to then save the Fed's monetary policy by pulling the neutral interest rate higher. This is going to be like magic, right, John Williams? I mean, you just went and printed up all this money and failed to do it, but now you're just going to magically figure out a way to create this inflationary scenario. COVID. Boom. Shut down the economy, sever the supply chain, supply-demand imbalances, here comes the inflation. Oh, and here's some stimulus checks on top of it all. Good job, boys. I didn't see that one coming. I really didn't. I didn't think the pain and misery of COVID would actually be a useful tool to the Federal Reserve, but it certainly was. Totally saved them straight up. All right. In fact, if it wasn't for COVID, I don't know what they could have done. I mean, they had an idea of what they were going to do. They had a whole game plan. It's called the makeup strategy. You can go and look it up for yourself. But COVID kind of made the makeup strategy irrelevant. See, they were going to figure out a way to push the elevated inflation expectation. They were going to do it through music videos, through the social media. They were going to do it all kinds of fancy little trickery ways, because most people have no clue about the Federal Reserve or the monetary policy. They don't have any concept of it. So to deploy the elevated inflation expectation using the makeup strategy meant that they were going to have to do it in untraditional means, like music videos and social media posts. This is how they were planning on doing it. But then COVID hit. Made all that makeup strategy irrelevant. Sever the supply chain, watch the inflation roll in. Up goes the interest rates, and now let's pull that neutral interest rate ever higher. So long as we can keep that supply chain broken, credible threats of tariffs, no worries. We got this covered, right, guys? I mean, this is the way I see it. I don't know how everybody else sees it, but this is coming from the Fed's own documents. So I don't know. I kind of break it down so that it's easier to understand. But ultimately, this is what's happened, right? And I tell you, the only thing that people can really push back against me on when it comes to the information is that it sounds very conspiratorial, considering that the central banking system literally cannot do anything but benefit the top elite. They might be able to figure out a way that you can get hired but they cannot figure out a way that your income, your wages is going to be enough to supply you and your family with a decent way. They can't do that part. That's something they cannot do. If they could, then they would be doing it as an example of history. There is none. So understanding that is the case. The Federal Reserve cannot do anything to benefit the working class individual other than getting you a job, but they cannot guarantee your wages will be buying anything. All right. Now they can guarantee that the wealthy will get more wealthy, because anytime you ever have money injection into the system, the separation will occur. Guaranteed. No doubt about it. Nothing can be done to change that, to reverse that. All right, guys, I think I got to get going here. What time is it? I got to go. I'm done with my lunch. Uneducated Economist. You guys let me know.